Today we're diving into a topic that's as fascinating as it is important: how major news events, like the recent attempt on former President Donald Trump's life, can shake up the financial markets. Whether you're trading crypto, forex, or commodities like gold, these events can have a huge impact on your trading strategy. So let's break it down. First off, let's talk about Bitcoin. As many of you noticed, right after the news about the attempt on Trump's life broke, Bitcoin's price pumped up. Now, why does this happen? Well, in times of uncertainty or crisis, people often look for alternative assets to safeguard their wealth. Bitcoin, being decentralized and often seen as digital gold, becomes an attractive option. So when there's political turmoil or potential instability, we often see a rush into Bitcoin and other cryptocurrencies. Let's take a look at some historical data. If we examine previous political events, such as elections, impeachments, or other significant incidents, we can see similar patterns. For instance, during the 2020 US presidential election, Bitcoin saw increased volatility and upward movements. This isn't just a coincidence, a trend. Traders and investors move their money into crypto as a hedge against traditional market instability. Next up is the forex market. Currency pairs can be extremely sensitive to political events. For example, any news that might indicate instability in the US can weaken the dollar. Conversely, currencies considered safe havens like the Japanese yen or Swiss franc might see a spike as traders move their funds to what they perceive as safer options. Let's dive a bit deeper. When news of a potential crisis hits, traders often sell off riskier assets and buy into safer currencies. This move can cause significant fluctuations in currency pairs involving the US dollar. The USDJPY and USDCH pairs are prime examples. After the news about Trump, you might have seen a dip in the USDJPY as traders moved to the yen, and a rise in the USDCHF as the Swiss franc attracted those looking for stability. And of course, we can't forget about gold. Historically, gold is the go-to asset in times of crisis. When people are worried about the future, whether it's due to political events, economic uncertainty, or global conflicts, they often turn to gold. It's tangible, has been a store of value for thousands of years, and isn't tied to any one country's economy. So seeing a spike in gold prices after such news is almost a given. Take a look at this comparison chart. You'll see spikes during events like the Brexit vote, the US-China trade war, and now this recent attempt on Trump's life. Gold's role as a safe haven means that during uncertain times, its price often rises as investors flock to it for security. Now, you might be wondering, how can you as a day trader capitalize on these movements? The key is to stay informed. News can break at any moment, and being able to quickly interpret its impact on different markets is crucial. Set up news alerts for key events and always keep an eye on how different assets are reacting. Remember, the initial reaction can be just the beginning. The real movements often come after the markets have had time to digest the news. There are a few tools and strategies you can use: setting up alerts on financial news platforms, following reliable news sources on social media, and using apps that provide real-time updates can give you the edge you need. Be ready to analyze and act on this information quickly. When such news breaks, it's essential to monitor multiple markets simultaneously. Crypto, forex, stocks, and commodities, each market can react differently, and often these reactions can give you clues about broader trends. For example, a sudden spike in gold might signal risk aversion, which could be mirrored by movements in the forex market or even in specific stock sectors. Oh, and if you want an easy way to automate your alerts and trading strategies into completely free bots, make sure to watch the suggested videos just before the end of this session. Look for patterns of correlation and divergence. If gold and the yen are both rising, it suggests a flight to safety. If Bitcoin and tech stocks are moving up, it could indicate a shift towards more speculative assets in the face of traditional market instability. These insights can help you make more informed trading decisions. One final tip: always have a plan. Know your entry and exit points before you make a trade. Volatility can create opportunities, but it can also lead to significant losses if you're not prepared. Use stop-loss orders to protect your positions and ensure you're not overexposed to any single asset or market. And also, if you are a beginner, don't miss out on our free trading course, plus a playlist full of effective and well-proven strategies. That's it for today, folks. If you found this video helpful, give it a thumbs up, and don't forget to subscribe for more tips on becoming a successful day trader. Hit that notification bell so you never miss an update. Thanks for watching, and as always, happy trading. See you in the next video.